So, a little bit of news on the Australian property front. The surf's up, and not everywhere though. So, CoreLogic published its latest results today, and what we've seen is that for Australia as a whole, the major capital cities, they've had another price gain of 0.5% over the month, looking reasonably good over the quarter as well. However, over the last month, there were 3 cities that had price falls. They were Melbourne, Hobart and Darwin. But what I wanted to point out to you is that it's not about even a whole city price change, because that's the average for the whole city. And as I've been highlighting for some time now, the upward price pressure is going to be where the immigration lands in Australia, if you like. And you have to be, it's going to be more region by region, it's going to be more suburb by suburb in terms of property purchases being a good idea going forward, because obviously there are headwinds of the higher interest rates are now beginning to bite. So there is excess supply in coming to the market in Melbourne in particular, as some people are winding back some of those excited purchases coming out of the COVID period. So there's going to be some selling pressure, but we always knew that. The good news is the RBA won't be raising rates because the Australian economy is slowing so quickly. They just won't have the option to do that. And the CPI inflation data out earlier in the week was relatively benign. It's still a high number, but it's not a panic number that forces the RBA's hand. So I don't think there is going to be another Reserve Bank interest rate hike. I think they'll still be thinking about it. They may even want to do it, but they won't do it. As for interest rate cuts, as the Federal Reserve in the US is going to be doing in September, they will be cutting rates unless the oil price skyrockets on geopolitical tensions in the Middle East. So the Federal Reserve in the US will begin cutting rates, but it will do so very slowly. It will cut in September, and there might be a second cut this year. Though for the Australian situation, I think we're looking at a Reserve Bank that's probably going to be sitting on its hands through the rest of the year, because, as I mentioned, those geopolitical tensions could see higher global oil prices, which again creates that upward pressure, or the firmness, if you like, to inflation. I don't see inflation running away to the upside. US, European, Australian economies are all slowing badly now. Germany had negative GDP growth reported yesterday, and has been flat for 6 or 9 months, I think, now in terms of growth. No growth in Germany. Germany's economy even probably overall contracting a little. So Western economies are slowing. Inflation is more modest but still too high. But the rate of slowdown economically means that, yes, there are going to be some interest rate cuts going on around the world, but not so much in Australia because, well, we just don't have the smartest central bank in the world. So that's why we're not going to get that. Coming back to this, so we're going to have no more rate hikes in Australia, which is a good thing. We're going to have an economic slowdown, which is not a good thing. I still advocate, if you like, if that's the correct word, that the high rates of immigration that have already occurred have a pipeline of 3 to 5 years. It's 20 to 30% of immigrants who buy, and the rest are renters first up. And obviously, immigrants are very keen to buy their home, so that pressure is in the pipeline. That's why I say for the next 3 to 5 years. But as I've said over the last recent months, it is very much about being very specific and having the local knowledge. Local on-the-ground knowledge and expertise, the kind that Property Club has, because they have mentors who live in all these different areas around Australia. Propertyclub.com. You need that local expertise if you're going to do well in this Australian property market moving forward. And of course, they help with a whole lot of other technical issues and even some technical tax issues. So it's well worth looking at propertyclub.com.au economist.com.au for a far more comprehensive rundown of the property market and the opportunities for investment than you will get pretty much from anywhere else. So, just coming back to the core issues, messages again. Australia's inflation rate is still too high, but a little bit slowing, but not, it's kind of stable at a too high level. It doesn't require the RBA to panic. The RBA won't be able to cut rates though in its own mind. I think they should have already cut 3 times, but they won't be able to cut in their own mind until inflation really does drop away, which means interest rates in Australia are going to stay too high for too long. We're going to have an economic slowdown, probably a recession, but property prices will remain very, very strong wherever there is a lack of supply coming onto the market, and that's pretty much the rest of Australia. So don't be panicked by the idea. I previously said even if the RBA raises rates, property prices are going to go up. Now they're not going to raise rates, but you have to have that local specific expertise. I hope this helps. I'm still very bullish areas that have a strong draw card for immigration, and I'm bullish those areas for 3, 5, maybe 6 years, regardless of interest rates and regardless of the state of the economy. I hope that helps, and have a good day.